Hi everyone, this is the next of our Allica Brokercasts, where we're taking a further look at the care home market, and we've also got some very exciting product news as well. So our goal today is simple, a whistle-stop update on this vital market, but specifically how our new enhanced credit appetite to fund care home transactions can support even more of our brokers and SMEs in what is a very dynamic and quick-moving market. So delighted to be joined by Brian Bovell today, one of our specialist relationship managers. Brian, before we get to the product news, which is I think what our brokers are going to be focused in on, we launched Allica's specialist care home team in September last year. Can you just talk to us about how it's gone since then?
I think what has been clear, and thanks Nick, and hello everybody, what has been clear from this launch is that Allica have undoubtedly identified a gap in the market where this sector has been massively underinvested. Our brokers and not only the wider professional community were telling us that their clients needed expertise and support for their customers and businesses in the care sector. And that's been evident by the fact that year to date we've seen over 180 million of inquiries. So it's clear that as a bank we're onto something. We have extended exposure to £10 million of debt for experienced operators, and we've also expanded the team. You may have been familiar with our previous video where Anthony was involved. I joined in February to look after Scotland and the North, and we've got a further recruit who will be joining us in June to cover the Midlands area. And that's all geared towards Allica becoming the best in class for this sector with our dedicated expertise, but also, as you'll find out shortly, having the policy that matches.
So we spoke to Anthony last year on a Brokercast about some of the core challenges faced by the industry throughout the pandemic and also transitioning out of that. How have you seen the market develop since then?
Well, the care sector has had incredible resilience over the pandemic. It has arguably been one of the hardest hit. But whether it was pre-pandemic or post-pandemic, it's not been a sector that's been able to acquire finance from incumbent banks. There's just been a lack of appetite, lack of desire, lack of understanding. They can become quite complex. You do need that level of expertise. And so we are there to ultimately fill that void. We've recognised it. We want to support. What we've seen is that the clients, the good operators, have had incredible bounce back, following the pandemic, following the settling down period, and we are now ready to be the number one in this sector. That said, the challenges don't stop for the clients in care. We're now seeing energy crisis being a prominent factor, and of course that's something that we are working closely with our clients to understand how they're affected, how they're adapting to it. So the challenges are still there, and as I say, we want to have that dedicated expertise to make sure that we can understand and relate to them. But also, not just us, the importance of using a broker, having that specialist advisory. They will know and have access to the market. They will understand what we need as a bank to make sure that we can look at their financing in a quick and efficient manner. So it's not just about us as a bank, it's about making sure that you've also got the right advisor that understands what the sector looks like as well.
So can you just talk to perhaps in a high level, the kind of example transactions you're seeing where perhaps there's not that traditional support that was there for these operators? So maybe a scenario where we're supporting an operator where traditionally a broker may have dealt with one of the incumbent banks, but our approach to that market is making a material difference. Perhaps you just give our audience a bit of an example of that?
Yes, so there's been a couple of great examples where the sector, as I say, has had a bit of a generic approach to it in the wider financing market, whereas quite simply, it doesn't matter how strong you are, doesn't matter how well you performed, or it doesn't matter about your resilience, it's just do not pass go, we're not interested, thank you, closed door.
And that's solely because of the sector?
Solely because of the sector. Solely because, for whatever reason, and to be honest with you, this is something that's been long-standing. As I mentioned earlier, pre-pandemic, post-pandemic, it hasn't really changed. And so we are now seeing operators who have come through, weathered the storm, they're either acquisitive or looking to refinance because their terms came up and they've been told thanks but no thanks. Doesn't matter that the performance has been good, doesn't matter the occupancy has been good, doesn't matter that the COVID impact, even in some regards, has been quite negligible because they've taken the right steps. That's all counted for nothing. You come and talk to us, that's a completely different conversation. We'll understand what's happened in the COVID period. We'll understand how you've adapted. We'll understand how your business has bounced back. If you have seen, a challenge in that period, and many have, but those good operators, that resilience has come through, and therefore we can take the time to understand that. We can take the time to go through it, and we want to support these businesses.
No one wants to see a market where good operators can't thrive, grow, and move forward. But as you said, another example of where brokers come in to often save the day. So let's get to the absolute meat of it then. I said we've got some exciting news around our care home lending policy and appetite. Can you just talk to what exactly we've changed and how we believe that'll help support our brokers and their customers in this market as well?
Yeah, absolutely. And you're right. This is the critical component that I think will make a huge difference to both brokers and the clients that are out there. What we found, and we are on a journey here, we are on, an evolving business. And one of the critical things about Allica is doing that test and learn, understanding what we need to do to support our clients. And having now been through that journey, and gone to the kind of second phase, if you will, we recognised that when we were looking at transactions, and we'll talk a little bit about first-time buyer as well, because I think that's another USP that we offer. But what we were identifying on that journey was that there was a gap in terms of experienced operators. We had a policy that was a bit of a one-size-fits-all, and while that's been really, really good for the first-time buyer market, it was slightly detrimental to the experienced operator market. But one of the big things about being agile and being a fresh bank is that we test and learn and we adapt to that scenario. So over the last few months, we gathered a number of example data. We used that internally and said, right, what do we need to do to shape experienced operators? And I'm delighted to say that we have, as I mentioned earlier, increased our overall exposure from £10 million. But more importantly, we are looking at a loan-to-value, maximum loan-to-value proposition, not on vacant possession value, but on market value too. And for those that are not maybe as familiar with market value too, that is a term in the valuer's trade, which is based on the special assumption that the property is open and absolutely trading, but no accounts are available, but there's a restricted sales period of 9 months. Now, that, in short, allows us to give some loan to value based on the goodwill of the business, not just the property in isolation. And this is really exciting because those operators, those successful operators who have built goodwill in their business, who have built value in their business, we are essentially saying to them, we can lend on that. We recognise that good operators who have created that value has got a value to us from a lending perspective. So it ranges from 80% of market value to up to, and I would highlight that 100% of market value to probably is more by the exception, but certainly 80 to 90% of market value to should give us a real USP in the marketplace. And quite simply, again, to translate that into terms, it should allow us to get there or thereabouts to a fully market value position of around 60 to 70% of the full value of the business. And that is going to be transformational for us.
Fantastic moves there for our brokers and for our operators. I guess as well, geographically, that probably opens us up to more opportunities given we were previously against vacant possession value and we see that divergence in underlying property value in different areas of the UK.
You're absolutely right. If you take London, for example, which has an inherently higher property value than, say, somewhere else in the country, you're kind of almost eliminating that. You're bringing back the value of the business to be a key component of our underwrite. And not just withstanding that, we are also introducing pricing that has also been adjusted to reflect our desire to increase exposure in this sector. And what you should see with this is some real competitive pricing. I don't want to use the term necessarily that it will be compared to high street, but it will certainly get us into that zone. So not only will we have a loan to value policy that should be market leading, we should also have a complement of pricing that should be attractive for all operators across the spectrum of the sector.
And the swiftest BDM responses and credit underwriting in the market. I've got to squeeze that in while I've got the opportunity.
Listen, 100%. When we sat and we did a healthcare event down south, I spoke at that table around, it's not just about the policy and the pricing, but it's also about the people as well. The people will be the glue that brings that together. And as far as I'm aware, as at today's date, we are the only bank that are offering that dedicated expertise to the sector. It's our primary focus in healthcare at the moment. It's one that we have recognised has been massively underinvested, so it will be the people that brings this glue together. And, speaking for myself, I've got over 20 years experience in the commercial banking world. Anthony also is vastly experienced, and the other colleague that's joining us. We've all got that expertise to bring the glue to the policy that should give us a market-leading proposition.
Super. And can we just finish up? You referenced first-time buyers in terms of the fact we've always supported them, even from our initial test and learn, and we've funded a number of first-time buyers, but just how the positive appetite changes that we've made, how that benefits first-time buyers as well as experienced operators, which you've already touched on.
Yeah, so I think it's important to highlight that we have an appetite for first-time buyers. And there's the old cliche, Nick, that says, how do you get experience if nobody will give me experience? And that's absolutely the key of our commerciality when looking at this opportunity. We have seen a number of first-time buyers who are highly skilled, who have got great business acumen, are academically really impressive. Why would we not want to look at supporting these individuals and taking that expertise and saying, from that point of view, do they have the skill set and do they have the synergies within that skill set to apply it to the care market? And they absolutely do. Now, of course, we're going to have a slightly different policy with regards to the first-time buyers. We're going to be slightly more tighter in terms of how we view it, but we'd absolutely want to support this sector, support those buyers. And so, it's more aligned to the vacant possession value because perhaps those first-time buyers haven't necessarily built up that goodwill value directly in the sector. But as I say, we're one of the only ones looking at first-time buyers. And again, it's applying that commerciality to say that there's individuals out there that have all the expertise and the right ingredients to make a successful business in the sector.
Superb. Thanks for being so clear about the changes. Great update, some very positive product news. So we look forward to updating you all again very, very soon. Thanks very much.
Thanks, Nick.